Next, time for business. Karis Garland is with us. Time to look at what's happening then in the world of business. Members of the OPEC Plus oil cartel have agreed to further output cuts this Thursday after a virtual meeting. Tell us more.
So these output cuts will total about 2.2 million barrels per day and come as part of an effort to prop up the volatile prices. The group, which accounts for some 40% of the world's crude, is being led by Saudi Arabia, who said it would extend its existing voluntary cut of 1 million barrels a day until March next year. Russia pledged to slash exports by 500,000 barrels a day. That's up from 300,000. And other countries like the United Arab Emirates, Kuwait, Kazakhstan, Algeria and Oman will also make smaller cuts. Meanwhile, OPEC Plus also invited Brazil, a top 10 producer, to become a member of the group. The country's energy minister said it hoped to join in January. Well, oil prices fell after the meeting, which some analysts say implies disbelief in the efficiency of the cuts. West Texas Intermediate is down 3% to $75 a barrel, while Brent crude dropped to nearly $80 a barrel. The Eurozone's year-on-year inflation rate dropped far more than expected this month, all while the European Central Bank says it could take more than a year to get the rate down to its 2% target. The Consumer Price Index, which was over 10% about a year ago, came in at 2.4% in November, and the core inflation rate, which disregards food and fuel prices, even dropped to 3.6%. Meanwhile, here in France, price growth slowed to 3.4% this month. This as the French economy shrank by 0.1% in the third quarter. The National Statistics Agency pointing to slowing investments and falling exports. While checking in on the day's trading action, the major indices on Wall Street closed mixed. The Dow Jones up nearly 1.5% and rallying to a new high for the year. The S&P 500 ended just over 0.33% higher, while the Nasdaq shed nearly 0.25%. The UK's largest rail union has accepted a pay offer from train companies after a 1.5-year-long dispute. The deal, which includes backdated pay rises, means workers from the RMT union won't walk off the job until at least spring next year, though talks over future wages and working practices remain. Siobhan Silk has more.
For now, the wheels will keep turning. The UK's largest rail workers' union, the RMT, has cancelled its planned December strikes after its members approved a deal on pay and job security. The agreement with the government and rail operators will give workers a backdated pay raise of 5% for 2022 and 2023, along with a guarantee of no further redundancies. It's after a long 1.5 years of negotiations and repeated industrial action. But talks are continuing over future pay and working conditions. If both sides don't come to a deal on those, RMT members could down tools again from next spring. And there is still some industrial action expected before the end of this year. Another rail union, ASLEF, which counts many train drivers among its members, has also been in negotiations for the last 18 months. Its members rejected an offer of 4% pay rises for last year and this year, and for now is planning to go ahead with its next strike starting this weekend. The British government and rail operators complain the industry is not financially viable. Costs are rising and revenues are dropping. Passenger numbers have not recovered to pre-pandemic levels. The UK Transport Secretary has said taxpayers' money has provided over 70% of the railway's income in recent years, and under the same conditions, any other industry would have collapsed.
And finally, a group of French beekeepers gathered in Paris this Thursday to protest imports of cheaper honey, which make it difficult for them to sell their own stock. Producers are calling for emergency government aid around 50 million euros, plus a minimum import price that can't be lower than the cost price in France. According to an agricultural union, the French consume an average of 45,000 tonnes of honey a year, while about 30,000 tonnes were produced locally these past 2 years. Sticky situation?
Sticky situation, but I suspect a very tasty one. Karis, thank you very much indeed. Karis there with all the business.